Hello guys, I'm back on my daily analysis for the DXY, and today again we are looking at our index chart, and I'll give you a specific my notation and which direction of the market I am favoring. So our index, let me have the notations in here. Yeah, okay. Let's expand this one. Um, thinks my screen is slow. Okay, down here we can see the inversion fair value gap which we had traded through. We came down, take out that low, and again we are wondering here, as they said, if we trade through this fair value gap, inversion fair value gap, then we can come down. Then we can come again in this area, and that area will be regarded as a resistance. But for now, we can see that this fair value gap is still favoring. It is still respecting because it has not traded through the VIX. Look at the VIX. Usually the damages are done by the VIX. So if the damage is usually done by the VIX and VIX is supporting and still respecting this, so it's telling us that you should still go for and accept that the buy side liquidity may be needed still. So thinking in that perspective, mm, we can see here. Well, yeah. So let's switch our time frame now. Let's go to the daily time frame. What we can see here, look at here, guys. Look at here. What do you guys see? See this inversion fair value gap. This is still respecting that, and look at the down candle here. This is not a block. This might be the internal range liquidity in the market. Price came down, take the internal range liquidity low, and now it can go higher. But if this market gets traded through this one, this up candle, then think about it. This up candle may act as a long-term order block, which will take us down into here, and obviously it will take out this lows. The downside I'm talking about. I think my internet connection is having some sort of problem today. Anyway, I will manage it and try to give my best. So I'm saying that the order block for the daily bullish order block, the down candle, is still respecting. It's not being violated yet. So there's a scenario I'm looking at that this might be the stop run. Oh, wait. What happened? What happened just right now? Give me a second, guys. Okay, let me pause this. Okay. I'm back. So I was saying that you can see this one still having problem in my internet. Sorry about that, guys. Okay, so guys, I was talking about this uh, run, this run here, taking out this low. This might be the internal range liquidity run, and this might be the low. After taking out the low, we are expanding. What is the downside? Because look at this. We have not violated the down candle, and even we have not traded through this inversion fair value gap line, this two lines. So there are possibilities that market will rally from here because onto the upside we are having a large pool of liquidity. It's markets consolidating here, but we have came out of the range. We have taken out the sell side liquidity here, and now what's next? It might be the buy side liquidity, but I'm not in the market that it's gonna go and do like that only. It can do whatever it want. We are just predicting the market, but which side I'm favoring? I'm still favoring the bullish side because once I will change my mind for the bullishness until I mean, if we take out this low, not to the wick. If we trade through this line, just below this line, look at this line. Yeah. If we trade through this line with a closed body, then I'll shift my mind and think that yeah, this is now shifting market structure and it's looking to go higher because what it will do, it will just break the mean threshold of this candle because right now, I think we are inside the mean threshold of this candle a little bit pushed onto the downside, yeah, but still we are inside of this candle and I'm just saying that we can rally from here. I'm still not convinced that we are we have shifted our structures and we have shifted our gears and now we are going on to the first bearish side of the market. Okay, 4 hour time frame. These two lines again, still respecting that. If it is internal range liquidity, each and every down candle should support the price. It should not be violated. So if we are bullish, this down candle should support the price and we can rally from here. We want this imbalance to be get traded through with a speed, with a velocity, and ultimately in this inside this shaded area, there's two different lines. And a price to trade through this one and come back, act as support here, and take out this all the highs. Monday, I'll be looking to take the trade on the upside if we get a Judah swing. I mean, if we open up, came down, fill the gap, then it might be a scenario to take the buys. Um, Also, look how beautiful the volume imbalance we have left for the buy side. Wait, I think it's not visible. Yeah, I'm talking about this one. How beautiful price has left this volume balance. So volume balance, no trading. It means it's gonna track the price. Now, um, where is it? Yeah, okay. I'm just looking at this area. If, I mean, look at this one, this down close candle. If we are bearish, it should have respected it. And ultimately, this one. Our first PDR is being violated. The next PDR is this one, this downwards candle, merging with this one, mitigation block. We can trade there, we can trade there, but can came down. It can give a rejection, but we can came down. And look at this very very clearly. Tomorrow scenario might be this one. We can gap up higher, trade that, give us some kind of resistance, and then again come out, take up some internal liquidity, and then we can go higher. Price can again trade through this area, not through this. I mean, price can again trade in this area. ICD just taught us about the inversion fair value gap. Well, no, it's good here. It's good here. I don't need to. Okay, now we can come once again here. Um, I wanna see the New York opening price. 8:30. Yeah. Okay, this is 8:30 New York opening price. No. Yeah, yeah, yeah. 8:30 New York opening and the block consolidation expansion. Yeah. So tomorrow, I don't see we need to come down and take out this or this. I don't think so. If we are bullish, we'll gap up higher. Let me show this scenario. We will give up higher, trade here, and tap this one. Look at this. I have showed you the what was that? Yeah, this one. This down close candle as a mitigation. Also, this is taking the short term high, so it's a breaker to what we can say. The lower time it's the breaker button, higher time it's the mitigation block. So what are we gonna give the name? We can hit that and we can do something like this. Take out that, come down, fill that gap, or ultimately this one. I don't think we are needed to go below this structure. This two consecutive plus candles, and then we can rally like this. Now let me switch. Oh well, let me show you again the higher time frame chart. This is no resistance liquidity, no? So, but for that we need to have a rapid force, a rapid push in the market to get above this high with a speed. That's what I'm expecting. Daily, still favoring by side until we take out until we take out this line with a down close or up close. Now EURUSD weekly chart EURUSD. I know, I know. We are still respecting this gap. Order block also upside. Down liquidity is this one. EURUSD. It moves in tandem, so I do think that this will be a stop run. This was a stop run, and we have not looked. We have not respected the high. I mean, we have traded through this high. If it was really bullish, we should have respected the old high, which it hadn't done so. And this is the first sign that it's not stronger for the bullish. We have beautifully respected this fair value gap. So we have taken out the highs and now we can shift our gears again for the sell side. If we take out this high again with a close body, close proximity, then I'll have to change my mind. Until then, I'll stick the bearish bias. If we take the fib from the body to body, look, we are still respecting the mean threshold of the upcast candle. Order block is being respected still. And now we have taken out the bias liquidity also. in a consolidation between this low, this high. We have taken the buy side liquidity. Now we can expand out to the lower side of the market, taking out this low resistance liquidity and signatures. Ultimately, this low I'm targeting. So tomorrow I don't want to see um any kind of what we say trading on the upside over time frame. Wait, guys, I think my internet connection is giving some kind of problem out here. Oops, let me share the. Okay, now again the dollar index 4 hour time frame. Let me switch to the daily. Respecting this one, but it if it was really bullish, it should have respected the old high. Now it has not. We are coming down. This is the level. I will have my eyes. The down close candle, the bullish order block. Oops. Okay. Now, now I'm switching to the lower of time frames. This is a small one. It's a daily um, fair value gap. This one is also a daily fair value gap, I think. So I'm also just a minute. Yeah, this one. That line represents the old high. Okay. And this is the lower time frame 1 hour fair value gap I have marked. Tomorrow, um, look at this one. This fair value gap represents daily fair value gap, and look beautifully how price had respected one time at here, came down, trade through that one. Again, in the future, it is respecting that fair value gap here, here. Also, we have a scenario there. Oh, I mean this one. So we have a scenario. We can go there, trade that bearish order block, and take out the slows. Uh, Switching the time frame. Now this is a breaker. Looks like breaker mitigation. What do you want to say? Obviously, breaker is the high. I mean the sponsor move which is taken out a short term or a medium term high. It doesn't look like it has done so. What's the high in here? 107840. Okay. Okay, it has taken up the high. This high. So it's a breaker. And look how beautifully we have came down, came up, respected the down close candle, and now we are back. Obviously, what I want to see in the price, this this one, um, until we take out a short-term high or reach. I mean, look at this one. Until we take out and reach here, I want to see this high to get it through, not to get it through. Oops. I think again my skin is stuck. Okay, let me give you a short projection what I'm looking at. Until we reach this one, I don't want to see this fair value gap to be filled, and this down close candle should be respected. 15-minute time frame. Um, this should be stayed open. I mean, don't think like that. There's a fair value gap. Price need to trade in there, and then I'll look to. However, price can break through a little bit, but I don't see any close inside this consequent encroachment. And if we take out this highs, there's all the highs, we'll have to change our mind. Still now it looks like taking out this low. Ultimately, this will take it to this. This was today's presentation and today's daily market analysis for the DXY with EURUSD. Um, until then, wish you good luck and good trading, guys. I'll see you guys tomorrow.